Ladies and gentlemen, welcome to Man in America. I'm your host, Seth Holhouse. Americans are struggling to afford food, rent, and gas, and 61% are now living paycheck to paycheck. Credit cards are stretched to the limits, and many folks are even relying on pawn shops to make ends meet. Meanwhile, world leaders are charging ahead with their green energy transition, shutting down farms and energy production and passing spending bills that will only increase inflation and make life even harder for the average Joe. Well, I guess they said we'd all be equal, right? Yeah, equally starving and equally poor. And these sanctions against Russia, tell me, what have they actually achieved? The ruble has only gotten stronger, China is baring its teeth, and a new world reserve currency is rolling in faster than Biden votes at 3 a.m. But from where I'm sitting, all they've done is provide the perfect cover to collapse Western economies into a giant pile of dead lithium batteries and solar panels. So what's really going on? I mean, they're telling us things are easing up and inflation isn't going to be that bad after all. Yet, why did Elon Musk dump almost $7 billion in Tesla shares last week? Why are other billionaires and CEOs also dumping millions in stocks? Is something major about to happen? Can we hope to see any positive changes on the horizon, or is the storm only just getting started? My guest today is Andy Schectman, who will be bringing us up to speed on everything going on in the financial world right now. I'll be asking him just exactly where we're at, what key changes have happened in the global economy since our last interview, what we can expect to see next, and most importantly, how we can shield ourselves from what's coming and be prepared for the future. Before we get started, today's show is brought to you by Rise TV. With all the big tech censorship and the demonetization going on right now, the subscribers at Rise TV are literally the reason I can bring you this critical information today. Over at Rise, our mission is to uncover the truth, no matter how dark and difficult, while always holding on to hope, even having a few laughs along the way. So on Rise TV, we have a massive content library, an amazing community of patriots, and you'll get to hang out with me for the second hour of every show and ask your questions and share your thoughts and ideas. And today, Andy will be there to answer all of your specific questions. But look, if you're not ready to join Rise TV yet, I understand. Times are tough. That's why you can always catch my show on all major video and podcast platforms. For as long as there's breath in my lungs, I'll bring you this critical information for free, folks, because this is how I'm fighting the information war. But if you do want to support me and get exclusive access to other Man in America content, the best way is to come out and try Rise TV. There's a link for a free trial and for my podcast and other show links in the description below. And folks, by now we all realize that we're in for a bumpy ride for the foreseeable future. Russia and China are truly flexing their muscles on the world stage. They've aligned with India, Brazil, South Africa, and dozens of other countries to transition away from the US dollar as the dominant global currency. So what does this mean? Well, for most of us Americans, the US dollar is all we know, right? All of our hard-earned money is completely tied to it, whether it's through the stock market, our bank accounts, pensions, 401ks, etc. But we have to realize that if the dollar collapses, all of those things will go right along with it. And that's the key. And that's why I've always talked about the importance of putting your money, even if just it's a small portion, into precious metals such as silver and gold. History has shown us that they can survive the ups and downs, the cycles and the deaths and births of fiat currencies. And if you're looking to do that, I recommend highly Noble Gold. So Noble Gold, they can either sell you gold and silver directly, or they can also do what's called an IRA transfer, where you can actually transfer your assets from your IRA into physical gold and silver with zero taxes and penalties. Most importantly, you can trust Noble Gold with your wealth. They have an A+ rating with the Better Business Bureau and hundreds of positive reviews from the folks that they've helped out. Now look, I want to be very clear. You don't buy gold and silver to get rich. You do it to protect your wealth. But if things get really tough, history has left us many stories of folks scooping up land and other valuable assets for a few gold coins. So now's the time, folks. If you want to learn more about this, open up a new tab right now and go to goldwithseth.com, or you can call 877-646-5347 to speak to someone right now. And look, if you already have someone you're working with, fantastic. I'm not saying you only have to work with Noble Gold. Right now is a critical time, and there's anybody you trust, please, please, please make that call, because things could be changing very quickly and you don't want to be left empty-handed. So, all right, folks, on to today's show. So with me today, I have Andy Schekman, and I had him on almost 2 months ago, and it's incredible how much has changed in that time. And so I was talking to Andy recently, and we said, look, I got to have you back on, and let's just get an update on what's going on, because there are significant things happening, folks. So without further ado, let's go ahead and bring on Mr. Andy Schekman from Miles Franklin. So Andy, thank you so much for joining me today.
Great to be here, Seth. Appreciate it very much. And been looking forward to picking up where we left off. I can't believe it's already been 2 months because, as you mentioned, things are speeding up at a blistering pace. But great to catch up. Great to be back. And thanks for having me.
Oh, absolutely. Absolutely. So, Andy, last time I had you on the show, which was, I feel like it was this bombshell interview. And I want to first just give an outline of what we talked about, because so much of what we're going to be digging into today is tied to what was happening 2 months ago. And on that show, you laid out this series of events that you believe was leading to the collapse of the US dollar, and really so much of our way of life along with it. So can you just give us a summary of the same information you presented before and where it's at right now?
Yeah, I'll try to do this as quickly as I possibly can. Look, there's a term in literature, I believe it's called fallacy of composition, where the individual pieces in and of themselves are not as relevant as they are together as a whole. And I think that's what I'm trying to get at here, is the things that I have seen are forming a linear progression of events, a pattern of de-dollarization that are leading somewhere. And so if we try to encapsulate what we talked about last time and kind of give it the Cliff Note version of this linear progression of events, we can go back to 2017. For me, that's where things really started to get interesting, and it was at the end of or in the midst of a 6-year downdraft in precious metals. You had cryptocurrencies, in particular Bitcoin, accentuating itself, and equity market portfolios doing exceptionally well at the same time. And I think you had what amounted to capitulation by a large segment of the metals industry. People who were invested in precious metals became just, I guess, disenchanted with the performance of gold, and here you got Bitcoin going to the moon. In any case, one of the things that stuck out to me in 2017 was the German Bundesbank publicly making a very large stink. And all of these points that I'll mention, I welcome your listeners to Google, because they're important to understand that this is not me pontificating. These are all factual events that I will pontificate on after we put them all together. But in terms of the signposts along the way, they're easy to find if you look. Germany says to the world, or to the United States, give us back our gold. We want our gold back. You know, we had been holding most of the world's gold since the end of World War II. And in a nutshell, the reason we were, and this is what made the dollar world reserve, is we said to the world, we will promise to sell you back, we'll buy back the dollars that you hold. This was to the governments, not to the people, but to the governments. You give us back the dollars you're holding, and we'll always exchange it for gold at a fixed rate of $35 an ounce. And so most of the countries around the world gave us their gold because it was a non-interest bearing asset. We can hold it for them, pay them $35 an ounce. They take the proceeds and buy our treasuries. Those treasuries give them a return on what is, in essence, a non-interest bearing asset. And after all, they can always exchange them right back to us for $35. It was a good deal. And this was the case for a very, very long time, until Charles de Gaulle from France realized we were printing too many dollars to fund the Vietnam War. Then we had gold behind it, and flew or sailed warships from France to New York Harbor filled with dollars, saying, give us back our gold. And we did. And it bled down, 50% of the gold from the treasury. So Nixon closed the gold window, making it completely fiat. So it's important that we understand kind of a little bit of a foundation from where this all starts.
Fiat really meaning that it's a currency that is just backed by nothing. Actually, Andy, Can you do me a favor and just shift over to your left slightly?
Yes,
perfect. I don't want your head to get cut off in the middle. Oh yeah, we want to see your whole beautiful face.
No problem. Appreciate that. So
Nixon basically, like he signed the death sentence to the U.S. dollar in 71.
Yeah,
right?
Absolutely. So this is one of the interesting points here is that we were holding everyone's gold as a result. So in 2017, the Bundesbank said, "Give us back our gold," and we did. But within a few months of that happening, the Bank of Turkey, Hungary, Poland, Austria, Czech Republic National Bank, I think I said the Bank of Austria, all of these European banks, and interestingly enough, most of the banks that said the same thing, we want our gold back too, not just from the New York Fed, but from the Bank of England. Interestingly enough, the majority of the banks who did this were the Eastern European banks that are part of the European Union, but all trade in their own sovereign currency. So I'm going somewhere with all of this, and I think that this is very interesting because if you fast forward till today, these are the banks that are continuing to massively, copiously accumulate metal. And as you'll see when we update the timeline here, or this linear progression of events, you'll see exactly what I'm getting at with some of these Eastern European banks, in particular like Turkey and Hungary. But anyway, so the banks say, give us back all of our gold. The following year in 2018, those same banks that requested all their gold back bought more gold as a group than they did in the previous 60 years totally combined. So all of a sudden, they go from net sellers of gold up through 2017 to repatriating it and copiously accumulating it, more so than in 60 years combined. The following year, 2019, those numbers were up nearly 100%, Seth. And then the Bank of International Settlements did what I believe was the first biggest event of my career. They reclassified gold as the world's only other tier one reserve asset. There's another thing for people to Google: gold tier one reserve. Since the end of World War II, it was just the dollar and U.S. treasuries that were considered riskless or tier one. The fact that gold was levied to a tier one reserve asset is a huge deal. Most of the people in my industry thought it would be a special drawing rights from the International Monetary Fund, which is about 200 countries from around the world who would basically pledge pledge their currencies to make one united currency. It's a world reserve substitute. Never happened. In fact, what did happen the following year is the International Monetary Fund asked for a new Bretton Woods system. Bretton Woods is where everyone met at the end of World War II to formulate the dollar as the world reserve currency, to formulate it taking over, or to anoint it taking over for the pound sterling. Bretton Woods was the moment after World War II that made the dollar world reserve. Following year, the IMF says, we want a new Bretton Woods. This was a very telling event. But what we saw in 2019 and the 2 years prior to this was repatriation, massive accumulation that amounted to front running of a decision by the Bank of International Settlements, which is the central bank located in Basel, Switzerland. So now you have U.S. dollars and treasuries and gold as the world's only tier one reserve assets.
So tier one meaning that if someone, so if I'm holding gold, it's valued at 1-to-1, right? Like if I want to take out a loan against the gold,
if it's allocated gold, as long as it's allocated and not like pooled or a paper contract, it has to be allocated gold held in a vault, would then be 1-to-1 as good as cash. I mean, an easy way to understand it would be: I lend you $1 million, I write you a check, you give me a briefcase with $1 million in $100 bills. I don't care if you pay me back. I mean, hopefully you do, and I give you back your briefcase. If not, I'm made whole. Well, that in essence is what tier one means. Kind of dramatic explanation, but you get the point. So that's really a signpost number 2. And maybe the biggest signpost, really, the repatriation being number 1, the bigger signpost being gold being revalued the world's only other tier 1 asset. So we move on to 2020. We see the IMF say we want a new Bretton Woods. We see the rise of a group called the Others on the COMEX market, which I do want to talk to you about later today. And this is a group of sovereign wealth funds and family offices. The Commitment of Traders report that does come out every week, showing the positioning of the largest traders in the COMEX market, usually
So
the commercial
COMEX,
banks.
am I correct in understanding that that's commodity exchange market, right?
Yes.
So that's the market is based in Chicago that sets the prices of everything from silver and gold to wheat and milk. Is that correct?
That is exactly correct. And if you watched Trading Places with Eddie Murphy and Dan Aykroyd, that was all the orange juice futures that were being sold on the commodity exchange. So this commitment of traders report only shows the positioning of the biggest traders each week. Normally, it's the hedge funds on one end and the commercial banks on the other. The commodity exchange typically never saw anyone taking possession of contracts, although you can. It was never a delivery mechanism until 2020, when this third group of reportables showed up on the commitment of traders report out of nowhere, and they called them the others. Sovereign wealth funds, family offices. Look at them as the most sophisticated, well-funded, well-informed private traders in the world, who all of a sudden started to systematically drain COMEX and the London Metals Exchange of available metal. They took more silver off the exchange than we see in a decade in 2020. They took more gold off in 2020 than the Bank of Japan holds in their official reserves. You're talking huge amounts, tens of thousands, millions of ounces taken off of the exchange in a pattern that we had never seen before. This progression of events of accumulation, of removal of counterparty risk, repatriation out of the system is continuing. And we get to
with the others, these being private families. So are these families like maybe like the Rothschilds or the Vanderbilts or some of these very big wealthy families? So basically what you're seeing is since 2017, which is around the time Trump got into office, ironically, there's some big shifts happening. And all of a sudden, countries and these massive families, which we know are very behind a lot of things happening in our world today, they know what's coming in the world. And so all of a sudden, they're just scooping up every last ounce of gold and silver they can get, like mad.
That's correct. And they're doing it. Think of any game you've ever played: checkers, chess, baseball, football, basketball. There's always a modicum of misdirection in it. The no-look pass in basketball, the hit and run in baseball, the fake the handoff to the left. Everyone moves this way, but the tight end creeps out this way. You got wide open on the other side of the field. In fact, the play is actually called misdirection. I learned a lot about misdirection from the book, The Art of War, which I formulated a lot of speeches after. The Art of War is a book written in the 5th century BC by a Chinese military strategist named Sun Tzu, who teaches you how to win without throwing a punch, win the fight. And misdirection is very, very pervasive in his teachings. This is a book that is mandatory reading at CIA, at West Point. It's taught in most major business schools on formulating arguments and corporate hierarchy. Same thing in most law schools, formulating arguments and corporate hierarchy. It is, something that Bill Belichick, arguably the best pro football coach of all time, reads it and uses it to employ game strategy. And so misdirection is very pervasive, right? And I think that these central banks, through the commercial banks, through the Bank of International Settlements, have been using the misdirection of price, suppression of price, to allow them to reposition. Where equity markets and bond markets and every market reaches all-time highs, yet the monetary metals, which speak to the health of a currency, kind of like peeking behind the Wizard of Oz, the curtain, and seeing a little old man instead of the big booming voice. Well, that's what rising metals prices signal, that it's a little frail man behind the curtain, not the big booming voice. And so the urge to suppress the price of metals not only allows the currency and the system to seem stronger and bigger booming voice than it is, but allows them to reposition without anyone noticing. So this is where we are at this point. And now we see the second biggest event of my career. And I'd like people to Google this too. And I want you to think about these things, about just how poor of a job our media. I mean, God bless someone like you, Seth, who has the courage to stand out there. And you know what? I'll pat myself on the back as well. The courage to stand out there and to speak these truths because the media, even those that we like to think are fair and biased, like Fox, aren't telling us. So how many people know that gold was reclassified tier one? I would venture to say most people don't. Well, the second biggest event of my career really takes us down the rabbit hole where most of this is leading. And that is the day we left Afghanistan. Now, growing up in the United States, you were always taught you never leave anyone behind, ever. When my daughter goes out, she's of age now where she can go out to the bars, I say, you never, ever, ever leave one of your girlfriends behind, ever, under any circumstances. And I say that to all of them when they come together before they leave. Now, you all come home together, right? So same thing in military parlance. I mean, you never leave anyone behind, but we did. We became, I think, the laughingstock of the world for a period of time. It was an embarrassing time to be American, be a patriot. And like you, I am very proud to be an American. I consider myself a patriot. That was a very dark day for me, the day we left our allies and our U.S. citizens behind enemy lines. I'm sure you feel the same way, right?
Absolutely.
So that was, and I think there was no coincidence in this announcement that Russia announced a joint military cooperation agreement with Saudi Arabia. Now, let me stop for a second and go back to 1971. 1971, when Nixon closed the gold window. At that point, the dollar's backed by nothing. It's fiat, right? We've covered that. So 2 years later, Henry Kissinger is sent to Saudi Arabia, and he strikes a deal with the Saudis. And he says, we're going to protect you. Let's call it a joint military cooperation agreement. And we will sell you munitions. We will have your back. No one will ever mess with you. But for that privilege, you will denominate oil globally in US dollars. This is what became of the petrodollar. So every country on the planet, just about 100%, has had to own dollars in order to buy oil through OPEC since 1974. And that is what has made the dollar the world reserve currency after Nixon closed the gold window. So we go to 2021 and we see Russia and Saudi Arabia announce a joint military cooperation agreement the day after we left Afghanistan with our tail between our legs. Does that seem concerning to you? It does to me, because what makes the dollar the world reserve currency is the protection of the Saudi kingdom by and large, okay? The day after that, Russia announces it with Nigeria, who has subsequently already agreed to sell their oil to China for a petro-yuan bond. That bond, denominated in yuan, is immediately convertible into gold on the Shanghai Gold Exchange. Think of how Iran avoids U.S. sanctions. Think of how Russia does it. Sell their oil or their natural gas to China for a yuan-denominated bond, which is immediately convertible into gold on the Shanghai Gold Exchange. Bang, you're holding gold, you're outside the system. Gold is now what? A tier one reserve asset. Oh, how'd that happen? So you have a what I believe is a massive announcement that our media hasn't told us about. The day after the announcement of Nigeria, this is 3 days in a row, you can Google this too, Putin announces that all nuclear-powered submarines in the Russian fleet carry hypersonic ICBMs. Day after that, the State Department comes out and says, we are terribly concerned about this new technology of missiles that go Mach 10, hit the ground at the speed of an asteroid, can't be knocked down, yada, yada, yada. That was their way of saying, don't mess with us like you did with Saddam Hussein and Muammar Gaddafi. So, now we're heading down this path of de-dollarization, and we're getting to the point where you and I stopped, and that would have been the weaponizing of the dollar. And when Russia was kicked out of SWIFT, I said, this is a very bad deal. This is huge, because the question that I need to ask people, I want them to think about, is, and by the way, before I do that, how many people know that Saudi Arabia and Russia signed this agreement? How many people know that Nigeria did? Big deal, right? Our media is not telling us what's important. And wait till you find out what's happened since we've last spoke. You won't believe it. Haven't heard of it, I'm sure. But
no,
anyways,
I was so, it's like foaming at the mouth to get you on, because I remember the last show I did with you, I learned so much, and I follow this stuff, but it's, aside from maybe looking at Zero Hedge or, Dollar Vigilante, it's hard to find what's really happening, especially for me. I'm not a finance guy. I'm trying to learn as much as I can, but I know last time I had you on, it's just like my whole head split open after that.
Well, you're a common sense guy, and that's what I like, and that's what's lacking in this country, and that's what's lacking in our administration is common sense, and which leads me to the point. common sense speaking, the weaponizing of the dollar has consequences. Were they intended or unintended? Are our leaders that stupid to know that by kicking Russia out of SWIFT, as the world reserve currency, you do not have the privilege to tell the world who can and who cannot use currency. That's just a big mistake, right? So by kicking them out of SWIFT and sanctioning them and freezing their assets, we pushed them right into the open arms of the Chinese and the CIPS system, the cross interbank payment system.
So CIPS is basically their version of SWIFT, right?
Correct.
Which allows international bank transfers.
That's right. To move freely outside of the SWIFT system. And you're seeing a lot of countries sign on to it, much to the chagrin of the US, including many of the European countries. So you see this deal. Now, I did forget one crucial moment. I should have backed up because that might be number two. Let's go back. Let's call the Saudi deal number three, because number two was the Belt Road Initiative. Can't believe I forgot about that. That's 2020. We really see the Belt Road Initiative expand. It's the largest infrastructure project in human history. It's China's way of connecting Asia, Africa, and part of Europe, the old Silk Road route. That's 75% of human population. On the Belt Road, they're settling all of the contracts with the Chinese digital yuan, which has already done north of $15 billion in successful transactions. So you are indoctrinating 3/4 of human population just between this endeavor into a new world reserve currency, or a currency, let's not call it world reserve just yet, but a new currency system that usurps the dollar, 75% of human population. So that's number two. Number three is the Saudi event. Number four being the weaponizing of the dollar and the consequences, because everyone is thinking, are we next? Over the last 6 months, China has sold $100 billion of our treasuries. Do you think they want to buy our treasuries anymore when they have their eyes focused on Taiwan? They're thinking, are our assets going to be frozen? Are they going to sanction us? So I think you're seeing a reaction by countries who are wondering if they're in the crosshairs of the U.S. and their sanctions. And so we are fostering a coalition and a desire to de-dollarize. And that's kind of where you and I left off, more or less. And I was surmising that, look, you got a Chinese digital yuan, a currency that is beta tested over 2 years, nearly 15 to 20 billion in successful transactions. You have all of these countries coming together. I had surmised for over a year now that we would see the Brics nations issue a new gold-backed digital currency. That's really where I think we are going, but that's always just been supposition. The RICS and Brics, Russia, China, India, South Africa, these are the countries that accumulate the most gold, produce the most gold. To them, it's been wealth and money for thousands of years. They don't mess around. And so if you think about who has the ability, there's a guy named Zoltan Pozsar, who's the repo market guru that used to work at the New York Fed, who recently came out and said, we are now entering a period of Bretton Woods 3, a system based upon commodities, not debt instruments. And if you think of who has all the commodities, we have quite a bit here that we're not able to really go after for whatever reason. But if you think about where the rare earth metals are, it's all China. The overpreponderance of platinum and palladium, well, that's going to be Russia. The
precious metals fertilizers in South Africa and the rest of Africa,
and China, right? and phosphorus and fertilizers in Russia. So these are the countries that have the majority of the commodities, right? And I have been assuming that there would be a coalition, that they would issue a currency to challenge for dollar hegemony. I've been saying this publicly really for over a year now. Actually, since March of 2020, when Nancy Pelosi came out and said viruses can live on currency in her House Subcommittee Finance bill, and things started to move away, I just knew that there was going to be a problem with the dollar retaining its world reserve status. So if we stop right there, in and of itself, those are amazing things. And I think when you realize that what makes the dollar world reserve is the fact that Saudi Arabia has accepted our protection in essence for the fact that OPEC would denominate oil globally in dollars. That's been the linchpin of the world reserve status for the dollar. So
basically, it's like the Fed which, is not, the Federal Reserve is not a U.S. institution. It's a private bank, right? They have created this fiat currency, this dollar, and they've done these corrupt deals, which I'm sure there's this deep, deep layers. You talk about Kissinger and Saudi Arabia. I can only imagine the kind of deals that are happening in the back doors of that conversation to prop up the dollar artificially, to take it off the gold standard so that the Fed could print unlimited money, basically, which we've seen happen. They're printing trillions and trillions of dollars, funding our wars and everything along with that. It's a fiat currency. And actually, there's an article, Kate, pull the article up for me real quick. There's an article talking about the 5 cycles or the 5 stages of fiat currency's life cycle. I'm going to pull it up for you really quickly here, which is, right, it goes through stage 1, where it's this new fiat currency. Everyone's optimistic about it. It goes into stage 2, where you start to have some restrictions. Stage 3 is the gambling stage where excessive liquidity makes its way into the stock market, the housing market, which is what we're seeing. Stage 4 is the penultimate stage of the fiat cycle. Sluggish growth in Western countries force financial institutions to make money through other means, than financing and brokering fees. And then stage 5 occurs when it's hyperinflation, which is the worst economic phase of the fiat cycle. In stage 5, the currency becomes worthless. And this is not just the US dollar. Like, every fiat currency that's come about is somewhere in this cycle, but we've never seen fiat currencies that last indefinitely. And so am I correct in understanding that with where we're at right now is we're on the edge of seeing the end of this US dollar as a fiat currency, and other countries around the world have recognized that that we just keep printing money out of nowhere, sending it all over the world, whether it's Ukraine or Pakistan or all over the place to fund who knows what kind of illicit activities and gun running and everything. But that basically this has been a key tool of the cabal to gain hegemony over the world. And all these other countries are saying, we're done with this. And they're teaming up with China at the center of that to take us at, basically supplant that as the world reserve currency. So what, and all the writing is on the wall, right? It's like the title of this episode, the thumbnail is about there's a storm coming, there's an economic storm coming. It's like we're seeing every single signs. We're seeing a dark black clouds over the sea. We're seeing massive waves. We're seeing lightning with the winds picking up. What's next in this?
Yeah, well, and to your point real quick, I would say that we are now transitioned to stage 4, the sluggishness, because if you realize that from the start of the pandemic until today, the Federal Reserve has printed more money than it has in the entire existence of the U.S. It took over 227 years to print over $6 trillion. They did that in the last 2 years. So
it's almost like they know something is coming and they're trying to get as much out of it as possible.
Well, and I'm going to, before I even tell you what goes next, I want to give you my thought on that. So if they realize, look, these are the smartest people, right? They may not be very moral, or their moral compass is upside down, but
or spinning, or broken in half, or burning in hell.
Right, exactly. But they're intelligent enough to understand the way this works. And so how do you reset the system? I mean, when Klaus Schwab said that, I wondered, how could you do that? I thought he was foolish. Well, first and foremost, you create a huge amount of money and keep interest rates at next to nothing, where hedge funds, in essence, can borrow money at next to nothing and blow up asset prices, where stock portfolios double in a year, house prices double or triple in a year, cryptocurrencies go up tenfold. They created so much money and kept interest rates so low that all of that money found its way into speculation and created massive distortions in price discovery, misallocations of capital and resources. They call this the crack-up boom in Austrian economics, where this massive expansion in credit and capital and low interest rates creates massive distortions.
So and I think is that distortion basically, like, is it almost like we're in the biggest bubble we've ever been in? Because all that money they're printing, and we know it's not coming into my pocket and your pocket. It's not going to the average American. You get your extra $1,400 for a stimulus check. Okay, that's nothing. So basically what's happening is that, so this is what's driving. It's like, how is it during the pandemic we're seeing house prices go through the roof? Stock market's doing fantastic. It's because there's so much liquidity being pumped in the market that it looks like everything is booming, but is it all just one giant bubble from the feds just turning on that tap of dollar?
Absolutely, and keeping interest rates low. And you're talking about the fact that you have the financialization of so many of these assets, like home prices, where a hedge fund can buy 4,000 single family homes and sell, and do them through Airbnb and collect money on it. I mean, there's just a million ways with all of this easy money and low interest rates that created these huge distortions in valuations. So that's point number one. Point number two is, there was recently a report that just came out by the National Bureau of Economic Research, and they said, look, in June of 1980, we had a 13.6% inflation rate. And if that was measured the way we measure it today, it would be 9.1%. Well, that's the inflation number that we've had for the last few months. I know that they're telling us it's a little bit lower right now at 8.5 or 8.6. I don't believe anything that they say because, they've massaged and changed the way that they gauge inflation. They've stripped out food, energy, and housing because you don't have to live anywhere. You don't have to eat or drive or heat or cool your home because you don't live in a home. So let's just pull it out and let's call inflation 9.1%. So in essence, that 13.6% in June or in June of 1980 would be 9.1%. Paul Volcker got tough on inflation. He was the former Fed chairman back then, and he raised the federal funds rate to 19.75%. The way you stop inflation is you raise interest rates above the level. He didn't just raise it; he really raised it above the level of an inflation and stopped inflation dead in its tracks. That's getting tough on inflation, right? We talk about our Federal Reserve, and as a premise to everything we're talking about, before I tell you what's next, I would simply say to you, our Federal Reserve does not want to be written about in history books as the entity that blew up the American way of life. And this is why I wonder, was all of this intended or not? Follow me here. So they talk about getting tough on inflation, right? They've raised the federal funds rate to 2.25%. That's not getting tough on inflation, even a little bit. We talk about their quantitative tightening, right? They said that they were going to quantitatively tighten. They're not tightening anything. In fact, if you look, they've only sold in the 19 weeks since they announced that they were going to start quantitatively tightening, they've only reduced their holdings of government treasuries by $40 billion and only $21 billion in mortgage-backed securities. They said they were going to do $60 billion of government treasuries and $35 billion in mortgage-backed securities a month. So that's $95 billion a month. They've only done $61 billion in 19 weeks. They're not selling those assets because as they do sell those assets, they are inversely related to interest rates. Rates will start to spike. So they've raised rates to 2.25% with 9% inflation. That ain't tough on anything. That's pussyfooting because the negative real return in that equation is 6.75% negative. So who in their right mind would buy treasuries like China selling 100 billion of them in the last 6 months? So I surmise that they do not want to be the ones that light the fuse. Yeah, they're talking tough. Their rhetoric is sure tough. It's like that guy that says if he would have said one more word, I was going to knock him out. One more, never was going to do it. He just wanted to seem tough. Well, that's what they're saying about, that's what my view is of the Fed, is that they know, look, their balance sheet in 2008 was 800 billion. It's just under 9 trillion right now. And all of the things on their balance sheet will raise interest rates when they sell them, right? Mortgage-backed securities and treasuries. So they don't want to sell them. They don't, and they can't, or they blow everything up. So from a standpoint of where things are going and what we talk about now, it is my belief that the Fed is only doing lip service. And so when I ask you, was it intended or not intended, when we get to the end of this and talk about, I told you that I thought that this could blow things up. There could be a reset. If Saudi Arabia were just simply to say, thanks for the memories, guys, it's been great, but we're going to issue oil in other currencies. And if that happens, every currency on the planet, every country on the planet that has had to own dollars to buy oil will dump them. And it's just like that scene in Trading Places. Sell, Mortimer, sell, because everyone's selling, the price is collapsing. The dollar will become a pariah, will become a hot potato. Everyone sells. What happens when those dollars come home? We'll talk about that in a minute. But that's where we left things off. Subsequently, since that 2 months ago, that interview, which I thought was fantastic and had the good fortune of talking with a lot of your listeners, we've seen some crazy things happen that support exactly what I'm saying. So let's talk about a few of them. We saw the India-Iran, it's called the India-Iran North-South Corridor come about. Google this. This is a free passage basically from Russia, in between from Iran to India by Russia. Everyone else has to go around the Suez Canal. This is another deal where if you're part of the group, you can easily get to where you need to go, trading from Iran to India, who have struck deals on trading for rupee and whatnot. This is a big deal. It's kind of part of like the Belt Road Initiative. You have all of this infrastructure being created if you're part of the group. U.S. isn't part of it. U.S. shipping would have to go around the Suez Canal, but India or Russia or Iran or any of the Brics nations can go through this north-south corridor. Big, big, big deal. How about maybe a huge deal? Saudi Arabia says we are contemplating joining the Brics. What? You kidding me? There's no contemplating when you make that announcement internationally. You're done. If you think our president, who can't chew bubble gum and walk 12 feet without falling over, went to Saudi Arabia, he hasn't even had the courtesy to go to the Mexican-Texas border. He goes to Saudi Arabia to ask for more oil. I call BS. This new bill that they just passed with the inflation bill, it's all about ratifying their green agenda. We are killing the Saudis' way of life. They don't want to give us their oil for a stopgap. We're blowing up their way of life, moving away from the combustion engine, and we're going to go there and beg for more oil? No. He went there to beg for them not to join the Brics nations. But my statement to that is, if they make the announcement, we're contemplating, it's done. It's the same thing that they went and said, we're contemplating selling our oil to China for yuan. The yuan-denominated bond, which is immediately convertible into the Tier 1 asset, gold on the Shanghai Gold Exchange. So the fact that they said this is huge, maybe bigger than huge. We also find out that Egypt is going to join the Brics nations, as is Turkey. Thought Turkey was on our side. No, they're going to join the Brics nations. Turkey came out and said they're going to ditch dollars for dealing with Russia in buying Russian energy. They will use their own currency or rubles. We have India announce that we're their largest trading partner, right? But they just announced that all domestic and international trades will be done in rupee, not in US dollars. And so we have maybe the biggest of them all that came out 2 weeks ago. You have a picture of Xi and Putin with their arm around each other and say, on behalf of the Brics nations, we're issuing a new world reserve currency. What? Really? So put it in context. China sells 100 billion in bonds. Russia and China say they're coming out on behalf of the Brics to make a new world reserve currency. Subsequently, Iran and Venezuela joined the Brics. Algeria is joining the Brics. You have Turkey and Egypt say they're going to join the Brics. Saudi Arabia, the linchpin of the dollar hegemony, going to join the Brics. You have gold reclassified Tier 1. You have India striking deals outside the dollar, both with Russia, with Turkey, with all of these countries settling in rupee or ruble or gold or other currencies. Do you see the common thread of massive de-dollarization, moving away from the dollar hegemony? And I think that you put it all together, I envision a currency that is, as we've just been told, a competing world reserve currency issued by the Brics nations. Think of the nearly 20 billion in successful beta testing on the new digital yuan. It started with the Olympics, has been funding the Belt Road Initiative. What better way to roll out a central bank digital currency than after it's already been tested for almost going on 3 years successfully? And now you get the pledging. Think of all of the the RICS and Brics, Russia, China, India, South Africa. Brazil produces gold. Now you're going to get Saudi Arabia in there. You're going to get Iran in there. You're going to get Venezuela in there. So you got oil backing. So you can get oil into this new currency. But everything that you get as a commodity backed currency system, what better way to denote the immutability and the veracity of it than on a distributed ledger? That works. So they won't make it convertible because de Gaulle proved that convertible currencies convert, but they will peg it to something. And when that happens, whether it be that first or Saudi Arabia saying, hey, thanks, but now since we're joining BRICS, we're going to open up oil because remember, we're being protected by Russia, as is Nigeria, but Nigeria is also in the Belt Road. So they're an extension being protected by China. But all of this coalition, we're all together. And you've got three nuclear countries there with China, Russia, and India that are all moving away from the dollar. And you can see it. Even India, we're their biggest trading partner, now they want to settle in rupee. So what is the moral of the story? Moral of the story is that if Saudi Arabia says this, we're issuing oil now in rupee, ruble, yuan, gold, and euro, and the dollar, like that. All of those countries dump dollars globally. Dump them to get out of the dollars because everyone's dumping them. They don't need them for oil anymore. They don't want them. When those dollars hit our shores, if you think inflation is bad now, how about hyperinflation? And this is what I was getting at. Did they know this was going to happen? Did they realize the weaponizing of the dollar would foster this coalition, would incentivize countries to move away, to find a back door? I mean, if you were Russia, wouldn't you? I would. I'd find a back door, and that back door is in the open arms of these nations that are all fighting the same fight. You know, what's the old argument? Even if you don't get along, you're the enemy of my enemy. So we're friends right now. And even if they don't get along, it's fighting a bigger fight, the dollar hegemony, the Western hegemony, the Western hypocrisy. I mean, think of the hypocrisy. What if instead of Russia and Ukraine, it was US and Mexico? And Russia gave $90 billion, Stinger missiles, drones, and provided the intelligence on what U.S. cities to bomb. I mean, is that not a declaration of war after they froze all of our assets globally, kicked us out of the SWIFT system? Hell yes, it is. And so they want to be away from the dollar hegemony, the hypocrisy of our administration. And I don't blame them. I mean, it's one thing to be a proud American, but look at it from the other side. And you can see why people are doing this. And my question is, are they that stupid to think that this wouldn't happen, or did they do it purposely? Which gets me back to my initial thought. If the Fed doesn't want to raise rates like Volcker did, even though the inflation rate is essentially the same, because they don't want to light the fuse, what if you create a villain? And that villain, by weaponizing the dollar, incentivizing 90% of human population, this would be, by the way, the BRICS nations and all the other countries that are joining, between 85 and 90% of human population moving away from the dollar, you've incentivized de-dollarization on a global scale. If they announce that, hey, thanks for the memories, but now we're doing it in other currencies because we're being protected by China and Russia, what happens? Dollar comes flooding home. Massive inflation. What happens to interest rates? Straight to the moon.
So right now, what they're saying inflation is, let's say they're saying it's around 10%, right? But, you know, if and when that happens, which to me, it almost seems like it's a when, not an if. It's yes. Like say the US dollar was standing on 10 legs, like they've knocked out 9 of them, and the 10th one has Correct. An axe kind of heading towards it.
Wobbling. Right.
Yeah. So what's inflation going to look like here? So say I've got $100,000 sitting in a savings account that's still sitting in the US dollar, right? So with 10% inflation, that's now worth 10% less. So maybe it's worth closer to $90,000. What happens when that unfolds?
You'd see price discovery is impossible. My dad had a friend who's a car enthusiast that was in Argentina in the midst of their hyperinflation. It was in a Ferrari dealership, and they were erasing the price every half hour on chalkboard and issuing a new price. You I think, haven't seen anything yet. When that happens, you see the value of the dollar precipitously decline. And maybe this is why you're going to have bail-ins where banks fail. You're going to have money market gating where you can't get out. These are laws that were put in 2009. Maybe this is why, to your point, you're seeing record insider selling as you know, there's this new wave of well, maybe they're going to slow down raising rates because inflation's come down a little bit on gasoline and energy. So now everyone's jumping back into the water. Well, as the insiders exit stage left, right? Massive insider selling over the last few months as people have slowly started, last few weeks, as people have slowly started to get back in thinking the Fed's going to pivot. And so that's, any news is good news as far as the markets are concerned. But yeah, that's where you see valuations of everything become unrealistic, and the dollar could precipitously lose its value. But the byproduct of hyperinflation, more relevant to this discussion, is a massive rise in interest rates. When you have a currency that is being inflated away, interest rates have to rise to compensate for the loss of purchasing power. Or no one will hold your currency and everyone will dump it, and it becomes a run on the currency, and it's just free fall.
That just spirals out of control, doesn't it, though?
That's right. And so you will see a spiking of interest rates. So this weaponizing of the dollar does the dirty work for the Fed if they are maniacal enough to be on the same page as, what's his name, Schwab, who says there'll be a great reset. Well, how do you reset it? You print more money in 2 years than in the history of the country. You blow up asset prices to record levels by keeping interest rates low. And then you weaponize the dollar and force everybody out. And at the same time,
and you'll be happy, right?
And
we've all built back better.
Right. And as rates spike to the moon, everything collapses. And what's unusual is the fact that stocks and bonds and real estate are all at all-time highs and all inversely correlated to a rise in rates. Stocks and bonds used to be inversely correlated, not anymore because the rates are so low. So the writing's
on the wall that we're entering into the perfect storm. And so the real question is that where's the lifeboat? How do we get through this?
So, all right, now I want to take you on a little tour of the last 4 months. And this is just a little bit of speculation on my part. But it's very interesting. And I'd like you, this is a thought experiment that I think you'll find really very interesting. To me, the life raft has always been precious metals. And I sell them. I own one of the largest precious metals companies in the United States. It's hard to come across to people that you try to be objective and you're not talking your book. I don't need to ruin my reputation by talking my book. I have done this for 33 years. We're a very successful company. I'm very comfortable in the way that I see the world, and I would like to share it with people and let you make up your minds for yourself. Yeah, I'd love to work with all of you out there, but this isn't about talking my book. This is about you tell me where there's a better place to put it. So one of the things that people say is, well, if this is the case, why aren't precious metals prices higher? Well, we can certainly point to the manipulation of the market. Take a look at the guilty verdict yesterday of the 3 traders for JP Morgan, including Michael Nowak, who was the head trader of the desk. They avoided RICO charges, which I think is BS, but they're all going to prison for a long period of time, probably for spoofing and manipulation of the metals market. And the year or two before that, JP Morgan, their employer, paid a $920 million fine for manipulating the market. This is an extension of that, and RICO charges were applied. And although they were acquitted of RICO charges, they were found guilty of massive manipulation. Well, that's part of it. But what the biggest takeaway from that is that it's been the commercial banks my whole career that have been suppressing the price of gold. And go back to the commitment of traders reports. Normally, as I said, you have the hedge funds and the commercials. The others came out of nowhere, but the commercials are the ones that are always capping the price of gold and silver, always. So first of all, I would like to take you back to the March 8th, I think it was, 7th or 8th, which was the high point for gold. All-time high. Also coincided with the nickel market failure on the London Metals Exchange, where for the first time in the 140-year history of the London Metals Exchange, they invalidated a trade. And that trade was a very large short position in nickel, where a Chinese billionaire had a huge bet against the price of nickel. The price spiked against him. He would have been bankrupt, and lots of people would have made a lot of money. But the exchange came in and said, this trade is invalidated. In my opinion, rendering the London Metals Exchange as a fraud. In an exchange like this, the way it's supposed to work is that if the trade bankrupts the client, then the broker who brought the trade to the exchange is required to pay for it. If he can't do it either, then it's the members of the exchange who get together and make the exchange whole to maintain its integrity. Well, they didn't. They bailed out the Chinese businessman. He was made whole. They validated all of the trades, screwing everybody else, and in my opinion, broke the integrity of the system. Well, from that day, I believe the commercial banks received a wake-up call. Let me tell you why. It was the all-time high in gold at that point, and silver. It was the high for almost a year into 2021. Prior to that, and subsequently, I believe that the commercial banks who on COMEX hold these huge short positions in metals that have been holding them down were told, time to get your house in order, because your short positions are far greater than in concentration and in size than the nickel market. And if this moves against us, you're going to blow everything up. So let's keep that in context. I'm going to take a look at something here. All right, I'm going to read something to you because I don't have this all by memory, so my eyes won't be on the camera for this part, but some 60,000 since that day, okay? Since that day, that this deliberately orchestrated sell-off by the commercial banks. So are you able to pull up a chart, by the way, and show something?
Yeah, absolutely. Where should we go?
I'd like you to Google OCC gold derivatives 2022. Okay. I'm going to show this before I continue. OCC gold derivatives 2022. And then hit images. Okay. And you're looking for a chart with a big, long orange bar on the right-hand side. Should be one of the very first ones you see.
On the right-hand side of the orange bar across the top of it?
Orange bar on the right-hand side of the graph. Actually, OCC 2022 gold derivatives.
Okay. Just 1 second. Okay. Yep. There we go. Let me pull this up.
Right, pull that up. I want to show people this.
Looks like something big happened in that quarter.
Yeah. And that's a 12-year chart, right? So, and think about it. January, February, March 8th was the day this happened. So to pull that up so people can see it.
Okay. I've got it up now.
Oh, I don't see it. Oh, there it is. Okay. All right. That's a 12-year chart. That shows the derivative position of these banks, right? The commercial banks. Look at first quarter 2022, the amount of precious metals derivatives that they threw at this price. You have inflation at 40-year highs. You have a war going on. You have chaos in so many ways, and an administration that seems lost. All of these reasons gold and silver should be going to the moon. Look at what the commercial banks did first quarter 2022. Okay, now I lay the foundation. I believe they were told, get your crap in order right now. January, February, March, that's first quarter. I believe what they did was the commercial banks, they jammed the ball down the hill so hard by suppressing the price of gold and silver enormously hard that what they did is they set a bear trap. Let me explain. Since that day where we've seen gold fall by about 30%, same with silver, some 60,000 net contracts in silver, over 300 million ounces, 170,000 net contracts in gold, 17 million ounces, over 33,000 net contracts in platinum, 1.6 million ounces, and 67,000 net contracts in copper, over 838,000 tons, have been bought back by the commercial traders. And so you're talking a buyback that the amount of repurchases is the largest that they've ever done in history, where they are massively buying these contracts back. How do they do that? They jam the price down with those huge amount of derivatives to push the price down. The hedge funds on the other side capitulated, and the hedge funds have been selling everything. So when the hedge funds sell, They push the price down. Who takes the other side of the trade? The commercial banks, who have all of these old short positions they need to get out of. So they incentivize. The hedge funds are saying, what the heck? I mean, there's a war, there's all-time leading 40-year high inflation. Why are we holding this stuff? Sell it. Not only sell it, go short. You have the largest short position and selling of long positions by the hedge funds, the managed money that we have ever seen in the history of the COMEX. Conversely, we have the smallest short position ever in the history of the COMEX, ever, by the commercial banks, ever, right now. These are the most well-funded and informed client traders on the planet who are always short. Always, my whole career, short, stopping the rise in gold and silver. They have flip-flopped. It's the ninjutsu move. Now, we'll see how it plays out. You see, what they normally do, Seth, is that the commercial banks have enough firepower that they can short a rising market and overwhelm the bullish sentiment, and it flip-flops and goes the other way. This is what they've been doing forever. They sucker in the hedge funds who let the price go up, then they short the rising market, drive the price down, rinse, wash, and repeat. It's this vicious cycle, which has always been stupid to me, why the hedge funds never wise up. But think of GameStop and AMC. Everyone shorted a falling market, drove the price lower. If you short a rising market, you better have really deep pockets. The commercial banks do. But the commercial banks, for the first time in the history of the COMEX market, are long in silver and almost long in gold, but they are, because they had a much bigger position in gold short, they're whittling it down. And they've used this huge amount of energy to push it down the hill hard and aggressively, where the hedge funds have capitulated and they are going short. And who takes the other side of those short trades? The commercial banks do. So you have the biggest amount of short covering by commercial banks in the history of the COMEX and the smallest short position in the history of the COMEX. Now, I want to tell you that they've done this in my career twice before, but nothing like now. In 2008, when they drove the price from 21 to 9 on silver and 1,000 to 700 in gold, they did the same thing by dropping their short position, but nowhere near as small as it is now. Nowhere near. But just so you know, in the ensuing 2.5 years, silver literally went up fivefold. And then they did it again in 2020 when they drove silver from down to $11. Their short positions were quite small, but nowhere near as it is right now. Nowhere near. And in the ensuing 6 months, silver went up.
Andy, your feed cut. Oh, nice. So, Kate, maybe you can try to get that connected there. Oh, there you go. So for some reason, your feed cut out. So basically, that's okay. So if I'm understanding this correctly, it's like what we're on the edge of experiencing are potentially two simultaneous events, right? Is the dollar no longer being able to sustain. They're trying everything. They're duct taping it. They're hairspraying it. They're using zip ties to hold the dollar together, squeeze as much out as they can before it really collapses. But they're also putting that same effort into suppressing the price in gold and silver so they can scoop up as much as possible, because they know that there's going to be an event that triggers where the dollar collapses, precious metals go through the roof. Is that, am I correct?
That's right. And now let me add the exclamation point to it. So you have the commercial banks flip-flopping, going long, suckering the managed money into record short positions. So as the price rises, think of squeezing, think of margin calls that drive the price up. So you have that, but here's one last piece of the puzzle. The other reportables that I talked to you about, over the past year, they have taken off of the exchange 103,079 gold contracts. That's 10,307,900 ounces, or 321 tons of gold. The most sophisticated, well-funded, well-informed private investors, sovereign wealth funds, family offices, people who know the central bankers, are draining COMEX. Just the other day, I saw something in silver that's mind-boggling, right? So the commercial banks they don't always want to take it off of COMEX because it's reported and people can see what's going on. So just talking SLV, right? SLV, which is a huge fraud, and it's the first or second largest stockpile of silver in the world held by JP Morgan, a bank who just, their head trader is going to prison for manipulating the market. They paid $920 million fine for doing it, and they're still allowed to run the world's largest silver trust. So keep that in context. In SLV, and so if you own SLV as a person who owns in your retirement account or whatever, you can never take possession of the silver out of there. Only the commercial banks can, who fund it. It's called baskets, huge amounts. In the past week, 20 million ounces of silver have been taken out of SLV, backdoored by the commercial banks. In the past month, 60 million ounces. And in the past 4 months, since the price has been driven down, since the commercial banks have flip-flopped, 100 million ounces have been taken out of SLV. What you are seeing in conjunction, and the same thing is happening on the London Metals
something
Exchange.
Really big is brewing.
Yes, they're flip-flopping, they're going long, they're taking possession, they're using the suppressed price to run misdirection and run cover for the acquisition. I don't know what happens tomorrow. I don't know if the price rises, if the commercial banks come in and start to short it again and rinse, wash, and repeat, or maybe they sit back and they let it run. And maybe they actually buy more longs and the price goes to the moon, as all of those hedge funds are massively short, historically short, experience a religious experience when they get margin called and the price starts to go parabolic. So could it be? Remember, at the end of the story, the little boy does see the wolf. And I've always said, one of these days, they will make more money to the upside than they ever did by suppressing it. And when you realize that there's the only way to successfully manipulate a market over a very long period of time, Seth, is to push it in the direction it is going. It would seem to me very unwise and very dangerous in a world that is moving away from the dollar, where the dollar could potentially lose its reserve status. And a country that is experiencing massive inflation and all of these issues that could very quickly change things, to be short huge amounts of gold and silver seems very dangerous to me.
It does. So, Andy, we're going to, pretty soon here go over to Rise TV only for the Q&A. And I have one question that I'll preface and I'll ask it over there. But before we do that, I want you just to give people your contact information. So for folks who are watching, look, I brought Andy on because Andy knows his stuff and he's intelligent, but it just so happens to be that you have a very successful company for people that are interested in buying silver, buying gold, doing IRA transfers, the whole 9 yards. So can you just let people know how to get a hold of you? And you're also, that's how I got a hold of you. I saw you on some show and I called you up, I sent you an email, and an hour later I was talking to you on the phone. So how can folks get a hold of you?
Sorry about my dog barking in the background.
That's
I heard
okay.
Someone knock on the door out there. So we have a new website that'll be done in the next 2 to 3 weeks, which will be fancy schmancy website that'll allow people to buy online to a certain extent. And that'll obviously is milesfranklin.com. Our current website, the online store, is inoperable.
I pulled your current website up so folks can see it.
Yep. And you're able to send us an email at info@milesfranklin.com. Say, Seth, Man in America sent me. We will give you an updated price sheet. We will answer any questions that you have. You can say you need to talk to me. I'll call you back, or one of my brokers, all of which are some of my oldest friends in the world going back to elementary school. We have a very tight-knit group. Everyone that works for my company is either family or 20, 30-year-long friends. We've never had a customer complaint. We're A+ rated with the Better Business Bureau. We're one of only 27 U.S. Mint authorized resellers. I left my corporate office in Minnesota, Seth, because this is a federally non-regulated industry, even though I moved to Florida last year, because it's the only state in America that regulates what is federally non-regulated. We've never had a customer complaint. We're licensed, we're bonded in a federally non-regulated industry. We're U.S. Mint resellers, and we will not be undersold. I think that your listeners will find that our prices will be as good or better than anyone in the United States. We are the envy of the storage industry with our Brics program. We can help with IRAs. Anything that your people need. I wholly respect your relationship with Noble Gold. They're a fine company. we're happy to help anyone that would like to get another opinion on things.
It's important. Yeah.
Yeah. But nonetheless, I think we'll stand up on merit and on price. Your listeners will not be the first customer complaint we ever have, and I'll make sure that they get the best price in the country. And so right now we do things the old-fashioned way. And thank you for letting me say this, that we do it the old-fashioned way. We do it by contacting you. We will have the online ability, but we'll make it worth your while, whether it's an IRA rollover, a straight-up purchase, delivered to you, stored to you, whatever you want. We'll make it worth your while. So it's info@Miles-Franklin. Say Seth sent me, and I will make sure that you guys get the very, very best price in the country, personalized attention, and would love nothing greater than the opportunity to work with your listeners.
Fantastic. Thank you. So what I want to talk about over on Rise TV, and I saved this particular question for there because right now we're on YouTube and Facebook and Rumble. It's, sometimes I say these little more sensitive things where I'm a little more comfortable behind that, the paywall over there, or for people that want to try it out, there's a free trial link in the description below. But I want to talk to you about these new 87,000 IRS agents and how you see playing that out and how gold and silver can play into that. Because, and again, this gets to be a little bit of murky waters, but I think it's a really, really important topic, because it's like, okay, am I better off having a little treasure chest buried in my backyard, versus stuff sitting in the bank account? So I want to get your opinion on that and how you think that might unfold with this new army of stormtroopers that are being told to, learn how to shoot a gun and be ready to use deadly force, which is frightening. But then I also want to get into a Q&A session where all the folks that are asking, if you have any questions at all for Andy, even if it's, hey, I've got this much money in my IRA and, I'm not sure if I should pay off my house or buy gold and silver, any of those kinds of questions, please bring them over. And again, you get a free trial. There's a link in the description below the video. So we're happy to have you for that, just for this session. But if you want to stick around and join Rise TV, it's $9.99 a month. And you're really, really helping us to keep putting out this content and this important information, because we're being targeted, as any other, truth speaker putting their face out there, we're being targeted, demonetized, et cetera. And so this is how we can do this full time. So, folks, as I said, the link is in the description below. So Dom, you can go ahead and cut the public feeds and we'll jump over just only to Rise TV. And so thanks everyone for following up to now. So, Andy, now that looks like we're only on Rise TV, what do you see playing out with this IRS stuff? And like, if I, for instance, say I called you up today